Hey everyone, happy Monday. I feel like I am coming to you from my car more often than my office these days, but I'm okay with that. That means I'm busy and lots of things going on. So I appreciate you guys hanging in there with me every week. And, this background isn't so exciting, but at least I am here making videos and not missing a Monday with you guys. If this is your first time to my channel, make sure you subscribe. I give these real estate market updates every Monday and specifically talk about different things that are going on in the Phoenix real estate market to help you prepare to buy or sell or rent or whatever you're looking to do in this market. And one of the things that I always talk about is the Cromford Market Index. And today I am focusing on the CMI because I have some news for you guys. If you're not familiar with the Cromford Market Index, it comes from the Cromford Report. Cromford Report is a subscription specifically for real estate agents to use to know what's going on in the market. So they analyze and extrapolate a bunch of data and provide it to real estate agents to then share with their clients. And the market index is basically an algorithm that they have created that is proprietary, that helps measure supply and demand specifically in the market. So how many homes are under contract, how quickly they're selling, looking at a bunch of different factors in order to help us understand the landscape, really. So the way that we look at the market index is any number over 110 means that we're in a seller's market, and any number below 90 means that we're in a buyer's market. And we have been way over 110 for a very long time. And for a long time, we were increasing, and then we've been falling, and largely because our demand went down in the market and our supply started to go up. So it was good news that the CMI was falling, but it was still at such a high level that we were still in a seller's market, tons of competition, multiple offers, etc., etc. And I have to tell you, that hasn't changed today. We are still very much in a seller's market, but the thing that has changed is the CMI went up this week. And it's been a very long time since I've been able to say that. Every week I tell you guys that the CMI has gone down, and some weeks more recently it's gone down a little bit slower and a little bit slower, but this week it went up. Why did it go up? Well, largely because we had an increase in demand. And our supply had been increasing, but it's not really moving up all that much. So now we have supply and demand going in two different directions, just slightly, but that forces the market index to increase. So we're sitting at 347.4 today, and our supply is sitting at 32.6. So 32.6 means that we are 32.6% of normal, or roughly about, what is that, 68% below normal-ish. And then for our demand, we are sitting at 113.4, which means we are 13.4% above normal. That demand, I think last week was like 111-ish, so that's clearly gone up. And the supply just isn't increasing as it has been over the last few months. So those factors are what has changed our trajectory. And months ago, I was telling you guys, if we continue this pace of decrease in our CMI, then we will hit balance in X number of months. Well, at this point, balance is nowhere in sight, except for 4 years away. So obviously we cannot predict where the market's heading just based on the CMI, especially in the long run, because the CMI can change directions with supply and demand factors. However, it does help us understand, which way we're heading for, a longer period of time. So we were seeing a trend downward, and it has slowed down and started to come back up. So maybe we're going to hang in this area for a while. Maybe the CMI is going to start to go up a little bit more. I don't know. But what I can tell you is we're not on that fast pace to balance as it looked like we could have been a couple months ago. So this also means that prices are not going down. The CMI is the predictor of price appreciation in our market. And so we find that prices and appreciation, home appreciation, follows the same trend as the Cromford Market Index. It's just a lagging trend. So as the CMI has been coming down, we've been seeing our annual appreciation start to decrease months after that. So it's following the trend exactly. And now we're starting to see the CMI go up. I mean, at this point, it's way too soon to say, but if that continues to go up, then we'll start to see that price appreciation go up as well. But bottom line is, unless our CMI is below 110, we are not going to see prices go down. The CMI is showing where price appreciation is, especially in a seller's market. So anything over 110 is showing that we're going to continue to increase in prices. Even if we're at 111, we're probably staying somewhat stable. I don't think you're going to see massive increases, but we're still not seeing price declines. So what I'm trying to say is, if you've been waiting to buy because you think prices are going to go down, it doesn't look like it according to the CMI. And it actually, as a matter of fact, didn't look like that even months ago. It just looked like maybe we would come to a more palatable market. So that's the bad news for buyers. So my advice to you is, if you've been considering purchasing, it may be something to take a little more seriously, because at this point, there's really no end in sight of prices appreciating. Now, I will say they're not going up as quickly as they have been, so that's a good thing. And that rate was not sustainable. So we're not going to continue to see 30%, 40% annual appreciation. That's just not realistic. But we're not going to see price crashes or price dips at all, at least from what we can tell, unless something catastrophic happens. So that is my advice and the data as far as prices go. A few other factors that we've been seeing lately, our days on market is 9 days on market now, which is still extremely low. And the median amount over the listing price that people have been bidding is about $12,000. That's come down from where we were a few months ago, but that's also come down because the CMI came down. So let's watch the CMI. If that continues to go up and we start to get into the 400s again, that median over asking price number is going to go up again. And also keep in mind that median over the asking price is a lagging number, right? Because those prices were negotiated roughly 30 days ago. When those homes went under contract, we get the data once those homes actually close. So that was last month pretty much. So now today, where we sit, if a contract's negotiated, it may be higher than 12,000 as the median. It may be lower. We'll see, next month. So anyway, I hope that's helpful and a good update for you guys. Thank you so much for watching and supporting my channel. If you have any questions, check the description below. I have a link to set up a time to chat with me, or just hit me up, call, text, or email. Let me know what your questions are and I will see how I can help. Thank you so much. Have a great week. I will see everyone back here on Friday.